The current economic landscape in the United States is marked by a complex interplay of factors, most prominently the Federal Reserve's monetary policy decisions and the administration's trade protectionist stance. The president's repeated pronouncements regarding his desire for lower interest rates stand in contrast to the Federal Reserve's recent decision to maintain the benchmark interest rate within a range of 4.25% to 4.5%. While the Fed had been consistently decreasing rates since the autumn, this pause marks a significant shift in its monetary policy trajectory, signifying a potential recalibration of its approach to economic stimulus. This decision to hold the rates steady comes at a time of considerable economic uncertainty, a climate largely shaped by the president's assertive trade policies. The commencement of the president's second term has cast a long shadow of doubt over the future trajectory of the U.S. economy. The impending threat of significant tariffs on imports from Mexico and Canada, two of the United States' most crucial trading partners, has introduced a substantial element of instability. The proposed 25% tariff, scheduled for potential implementation as early as February 1st, has sent ripples of concern throughout the business community, raising apprehensions about potential disruptions to supply chains and escalating inflationary pressures. The administration's aggressive tariff strategy extends beyond North America. Threats of a 10% tariff on goods imported from China have further intensified the global economic unease. Furthermore, the president has publicly indicated his consideration of imposing tariffs on imports originating from the European Union. This expansive approach to trade protectionism, characterized by a willingness to impose tariffs on a wide range of goods from several key trading partners, presents a significant challenge to the stability of the global economic system and raises questions about the long-term consequences for American businesses and consumers. The president's outspoken criticism of the Federal Reserve's monetary policy further exacerbates the prevailing atmosphere of uncertainty. His public declarations, asserting his superior understanding of interest rates compared to the Federal Reserve officials, represent a direct challenge to the institution's independence and its crucial role in maintaining macroeconomic stability. The president's statement, "I think I know interest rates much better than they do, and I think I know it certainly much better than the one who's primarily in charge of making the decision," underscores the inherent tension between the executive branch and the independent central bank. In response to this overt political pressure, Federal Reserve Chairman Jerome Powell has consistently maintained a posture of political neutrality, a stance essential to preserving the integrity and credibility of the Federal Reserve. When directly questioned in November about the possibility of resigning if requested by the president, Powell provided a firm and unambiguous no, emphasizing his commitment to the institution and its mandate. He further clarified that the president's power to remove Fed governors is explicitly restricted by law, thereby reinforcing the legal protections safeguarding the Fed's independence from undue political influence. The confluence of these factors, the pause in interest rate cuts, the looming threat of widespread tariffs, and the president's direct criticism of the Federal Reserve, paints a picture of considerable economic uncertainty. The potential consequences of these intersecting pressures remain largely unpredictable, raising concerns about the potential for slower economic growth, increased inflation, and further instability in global financial markets. The coming months will be crucial in determining how these challenges will be addressed and what impact they will ultimately have on the American economy and the global economic landscape. The interplay between monetary policy, trade policy, and the ongoing tension between the executive branch and the Federal Reserve promises to shape the economic trajectory of the United States in the foreseeable future. The administration's approach to trade and the Federal Reserve's response to both economic conditions and political pressure will be pivotal in determining the future economic prosperity of the nation.